Hey there, everyone. Welcome back to Best Insurance Guide LearnLabs. If you're new here, I'm Jason, and this is the place where we break down all things insurance, finance, and ways to make smarter decisions about your money. Today, we're diving into a topic that often comes up when we talk about retirement finances. So, what exactly is a reverse mortgage? Well, let's break it down together. A reverse mortgage is a special type of loan that allows homeowners, typically over the age of 62, to convert part of the equity in their home into cash. This can be a game changer for retirees looking to boost their income without having to sell their home or take on monthly payments. Now, I know the term mortgage can sound a bit scary, but trust me, a reverse mortgage isn't like your regular loan. In fact, it's pretty much the opposite. With a regular mortgage, you make monthly payments to the lender, and over time, you reduce your loan balance. With a reverse mortgage, though, the lender actually makes payments to you. You don't have to pay anything back until you move out of the house, sell it, or pass away. So no more worrying about those monthly mortgage bills. Now, reverse mortgages are popular among retirees who've paid off their homes and want to free up some cash to enjoy their golden years. Maybe they need extra money for healthcare expenses, home repairs, or even just everyday living costs. But of course, there's a catch. Isn't there always? While a reverse mortgage can give you more flexibility, there are a few things to keep in mind. For one, the loan must be repaid when you sell the home or move out, and the amount of money you can borrow depends on factors like your age, the value of your home, and current interest rates. The older you are, the more you may be able to borrow. And of course, the better condition your home is in, the higher its value, and therefore the more equity you can tap into. Now, let me share a bit of a personal experience. A few years ago, my own parents were considering a reverse mortgage. They were looking for a way to supplement their retirement income, and at the time, their home was fully paid off. After a lot of research, we sat down with a certified reverse mortgage counselor to go over all the options. We were cautious, of course, because we wanted to fully understand the long-term impact. The counselor explained how the loan balance grows over time and how interest and fees accumulate. But they also reassured us that as long as my parents lived in the home, they wouldn't owe anything unless they sold it or moved out. So after careful consideration, my parents decided to move forward with the reverse mortgage. It gave them a nice cushion for their monthly expenses, and they didn't have to worry about making regular payments. So here's how the process works if you're thinking of getting one. First, you'll need to meet the eligibility criteria. That's being at least 62 years old, living in the home as your primary residence, and having enough equity built up in your home. You'll also be required to undergo counseling with a HUD-approved reverse mortgage counselor. This is super important. It ensures you understand the ins and outs of the loan, the repayment terms, and your responsibilities. I can't stress enough how crucial this step is. Once you're approved, you can choose how to receive the payments. As a lump sum, monthly payments, or a line of credit you can tap into as needed. The flexibility is one of the biggest advantages of a reverse mortgage. Now, I've got to be honest here. A reverse mortgage isn't for everyone. If you plan on passing your home down to your heirs, it could potentially reduce the amount they inherit, because the loan will need to be paid off when you move out or pass away. But if you're okay with that, and if your primary concern is financial freedom in your retirement years, it could be a really good fit. So, to wrap things up, a reverse mortgage can offer retirees a way to access their home's equity without monthly payments. But it's important to weigh the pros and cons carefully. If you're considering it, I highly recommend talking to a certified counselor or financial advisor, just like I did for my parents. Make sure to hit that subscribe button, like this video if you found it helpful, and drop a comment below if you have any questions. I'd love to hear your thoughts or any experiences you've had with reverse mortgages. Thanks for watching, and I'll catch you in the next video.